Hey Ken, Todd Ballinger. Really apologize for this delay in getting back to you. I was out on spring break. My lead developer was out on spring break. All of our families were out on spring break at the same time, and it gave us limited coverage last week. I've gone into your account, and you'll notice if you go in now, at the top there's Pat Owen, this is yours, and there's Pat Owen Todd video. So you can see the case itself that I did, and I made no changes on this page. I went to the borrow page. And what I did is I just looked at your scenario here, and I thought this was all fine in terms of the setup because you've got the payment only, no taxes and insurance. Sometimes for clients, it's good to include that and include it on both so that they just know that even when they pay cash, they're going to have a payment each month for taxes, insurance, and homeowners, that kind of thing. But because you left it on both, I think you did a great job there. Everything up here looks good. You've got closing costs in, you've got purchase price, loan amount, down payment. Now, I may have changed this a little bit, and you can change it back. I was just trying to say, I was following your email, a purchase price of 225, borrowing 80% at 180 at 4 and a quarter. So again, all this looks perfect up here. You got net cash at closing 284 versus 107.5 in this example. You get your payment difference of 885 versus not. You might want to consider after tax or not. It just depends on whether they want to look at it from that perspective, but it's cleaner just to simply show the payment difference. Now here's the one spot that I needed to clarify, and that is if you've got this money left over at closing, right, $284,000. All right, so in the numbers down below here, all right, you've got to do something with that money. So what I did is I clicked here and said at closing I want to make a one-time payment of $284,000, and that payment will either go towards savings or towards principal depending on what your focus is. So to kind of show what that looks like, if I go back to 0 years, which is basically closing, you'll notice now the interest payments are 0, principal 0, but what's the difference here? In this case there's $284,000, and in this case there's no money. Now, if she has $107,500 left in this scenario cash, to be fair, I want to come in here and add a new payment and say $107,500 at closing. Okay, so that's a payment she's making. So now you'll notice the payment's going to be the same each month, but if she pays cash, she's going to get to put $818.59 a month into her savings account, and that account is starting out with $107,500. Here, she's got $284,000 going in the account at closing, and that's because I'm showing that there's $284 available here, and there's going to be no monthly additional amount that's going to go in over time. Now let's go out over time. What is the time frame, all right, that we're going to look at? When it's something like this where a client's looking at paying cash, I want to look at the life that they could be. How long could they be in this home? So if she was 55, I'd probably go out 30 years to 85. If she was 65, I would probably go out 20 years. Okay, to say, okay, she's 55, she'll probably live there. 65, sorry, she's 65, so 20 years, 75, 85. And now this is going to compare. Notice the savings balance here, the payments and everything are flowing through. Here's your wealth impact. So it's going to cost her $132,376 more to pay cash over 20 years than to borrow based on this scenario that you've set up here with an after-tax rate, savings rate of 6.6% and a property appreciation of 0.05. Since this is going to be the same for either property, I also recommend that you leave this at 0 just because it just doesn't cloud things up and it doesn't affect the numbers. Now if I want to go over to the repay screen and kind of see this visually, graphically, I come to the repay, I click use same as borrow tab. That's going to sync everything up. I've got my pay cash now, which means what do I have? I have no mortgage. I put $107,500 at closing, and I have $819 a month. That's both going into savings at 6.6%. That's going to grow right here to a certain amount. I can look at my equity. I can expand that if I want. See my savings balance is $807,473, right? Now compare that to down here where I've got a mortgage. There's my black line getting paid down over time, but I've got my savings line up here. That's 284. That's my starting point plus the difference each month in the payment. This is saying negative 67. What did I do? I may have Minimum monthly payment 885. Let me see what I did. Sorry. Sometimes when I'm talking, I'm clicking. I'm not 818, 818. Let me just sync this up. Make sure. Okay, yeah, 885 is the minimum payment. I just didn't sync those before I clicked back over to the repay to make sure they were the same. So now I'll click use same as borrow tab. All right, cool. So now we got 885 and 107.5 a month. That's growing here. And down here, all we have is 284 growing at 6.6%. There's no extra payment getting paid, right? But I can see this is growing to what? I can expand my equity detail if I want to get an exact number. The savings account's growing to 1.05 million over that time period. And what I like to do is with clients, I say, are you really in debt? If you have $1,059,000 here, couldn't you write a check for the mortgage balance of $86,000 and pay it off and be debt free? You've still saved $132,502. But what did you have to do? You have to make that lump sum of $284 now, and you have to be able to earn that 6.6% over the next 20 years or whatever. If you go out 30 years, and this is where sometimes I'll do, say, 20 years on the borrow tab, and then on the repay tab, I'm going to go out 30 years. And that way I can show something different. And now you're talking about $250,000 difference over time. So hopefully this helps. Go in and look at your case. It's it'll be right in here. It'll be under Todd video, and go through and kind of play with the numbers. But hopefully this will give you a good feel how to set this up and to show the real value of your advice to your client. Have a great day.